Good morning, beautiful people, and welcome to another episode of Monday Morning Coffees with Joel. Today, we're at the Exit Realty offices, and we're going to be talking to Andrea Hughes at the Bank of Montreal about mortgages. Stay tuned, because this one's going to be good. So now I'm here with Andrea Hughes from the Bank of Montreal, and we're going to be talking about mortgages today. Andrea Hughes is a mortgage specialist with Bank of Montreal, and I'm just going to have a few questions for her today for all of you guys out there that are wondering what is important and what do you need to know when it comes to mortgages, buying your first home, potentially even refinancing.
Thanks for having me, Joel. I really appreciate it, and I'm happy to be here today.
Awesome. Andrea, can you share the story of how you changed careers and why you chose this industry?
I absolutely can. So, Joel, for 17 years, I actually was in your shoes. I spent 17 years as a realtor in the St. John real estate market. And when COVID hit, a lot of things changed within the industry. And I found myself not able to partner with a trusted mortgage professional. The ones that I'd previously been using, they ended up retiring. And when they did that, I was left without somebody to guide my clients. And when I saw the opportunity come up with Bank of Montreal, I really felt that I could be that trusted advisor and I would have that ability to guide clients, work with realtors. I know the industry inside and out, and it really felt like a great fit for me.
And I would agree. I have worked with her many times and the transactions just go so smoothly because you understand the process.
I do.
You understand why I'm asking for certain things, the timelines involved in this industry. So I just feel that that does give you a leg up as a professional in the mortgage industry.
Yeah.
You saw a need there that wasn't being fulfilled prior and you thought, I can do that. And that makes a lot of sense to me. That's great.
Yep, absolutely. It really has worked out to my benefit because I know the importance of these deadlines. I know when you've got a confirmation of financing date, if you've got 7 days to meet it, I know the importance of having it met as soon as possible and making sure that all parties are kept in the loop and involved throughout the entire process.
That's right. That's so great. And I've personally experienced that. And it just makes everything go so much smoother.
Yes.
So we're just going to start off talking about pre-approvals, Andrea. Can you maybe explain to everyone watching and myself, why is it important in this market or at any time to get a pre-approval in place?
It's a great question, Joel. So the pre-approval is really the most important part of the home buying journey. You want to make sure that you have your financial home in order, that you know what you can afford for a mortgage and for payments on a monthly basis. Without having that pre-approval in place, you really have no concept as to what the affordability might be for the homes that you're looking at. A lot of people start their search online and they'll use a mortgage calculator, which will indicate to them what their payments might be. But that doesn't really tell the whole story. You're not able to see what your qualifying rate is going to be. It's not doing the stress test for you. You may think that a payment of $2,000 a month is comfortable, but without looking at the whole picture, you really don't know. Having that pre-approval in place allows your realtor to go out and search for a home at the right price point. Without it, you're really looking blindly. And in this competitive market, that's not something that you want to be doing. On top of that, it really helps the sellers to see that you've done your due diligence up front. You know that the sellers will know that you've actually gone through the process, you've been vetted by the bank, and they have secured your pre-approval and you are set and ready to buy.
I love that answer, Andrea, because I say that all of the time to clients, and it's so validating to hear someone from your industry singing from the same song sheet, because it's so important to come into this market with your financial house in order, like you say. Absolutely. That is such an important concept. And I'm going to tell you why. It's important because the market is moving quickly. Mm-hmm. Andrea, right now, houses are selling in 33 days on average. So that is not a lot of time. That means from the moment a home is listed to the time that an offer needs to go in, we're seeing 5 to 7 days on average right now. So can someone look at a house on Monday and have an offer in by Friday with a pre-approval letter?
Yes. If they have their pre-approval already in place, it makes the process so much easier. If somebody sees a home on Monday and offers are due on Friday, I will often get calls on a Tuesday or Wednesday asking, I need this pre-approval, can you do it? And it really all depends on how complex the situation is. I do my best to turn it around, but it's not guaranteed. If you have everything set up in advance, then it really allows you to have that comfort level going in, knowing you've gotten everything in place. Having the pre-approval also helps to save time on the back end. So when you have your pre-approval in place, I've already looked at your income. We've already looked at your credit history. We've already looked at your down payment. All of that has been confirmed and verified by the bank. The only thing we're looking at is the property specifically. We want to make sure it meets our property standards, that it's a minimum size, and it meets all the standards to the bank. And we also look at if you are doing an insured mortgage, so you have less than 20% down payment, it would have to be reviewed by CMHC, Sage, and your Canada Guarantee. That only takes a day or two, so really it cuts down that amount of time that we require on the back end.
Right, thank you. And that is so important. Again, I can't stress enough. This is a market for buyers that moves so fast. So anything we can do at all to help speed up the process once you find the house you want, that is so crucial. And again, the financial piece is important. We want to go into that offer scenario with a pre-approval letter from a bank, such as BMO.
With confidence. That way you know that you can make this offer and that there really isn't anything that's going to stop you from getting that home once your offer's been accepted. There's no surprises at that point.
Right. And so sometimes what we have to think of is the perspective of the seller. So in this market, we're very frequently seeing multiple offers. So if I'm representing a seller and I'm laying out, let's say 6 or 10 offers in front of them, and I'm saying, okay, this offer right here, this is a cash offer. This next offer is part cash, part financing. Here's the letter of approval. Offer 3, it's a finance deal, and there's a letter of approval from, let's say, BMO. And then I go down the line, and the last 2 or 3, all I have is not a blank offer, but an offer without any supporting document. So they're saying that they're going to finance this deal, but I don't see any proof. Well, I'm going to tell you right now, these first few offers where all of the homework is done, the diligence is evident in the way that the offer is being presented, those are the winning offers. It isn't always just the money, it's how the offer is presented. And do the sellers feel confident and comfortable with accepting that offer and knowing that that buyer has done their diligence, has the capability, financial capability to bring that offer to a sold and to a closed place. So that is really what they're looking for. They want that confidence because they have many options. And when they're trying to decide, that's one of the key factors that is considered. So next up, all of our favorite topics. I actually do talk about this topic a lot, especially on Monday Morning Coffee. Let's talk about interest rates. So what is the current trend with fixed rates? What's going on with variable rates? And what can people expect right now?
That is probably the hottest question in the mortgage industry right now.
Yeah.
And one that I wish I had a crystal ball so that I could see the future and tell clients what's to come. And we've gone through 2 years of instability. We started out in February of 2022 with prime interest rate at 2.45. We're at 7.2% for prime right now. It's increased by 4.75% over that past 2 years. So there is a lot of talk about, are we going to see this go up more? Will it start to come down? only time will tell. Right now, what we're expecting and what we've been told by many of the major economists is that interest rates are going to start to slowly back off. We're going to see them start to slowly decrease. Does that mean they're going to drop overnight? No, it doesn't. It's taken us 2 years to get to this point, and it's not going to be a quick fix overnight drop to get back down to that 2 and 3 or 4 percentage point range. So what we can expect is some slow, gradual decreases. With any trend, even as we're going down, you are going to see some slight blips that it might go back up. We were notified last week that our post rates increased from 6.79% to 7.04% on a 5-year fixed. So that has come out of the US. I guess the American economy has given us indications that there could be some inflationary pressure put on us again. Is it going to last and stay up there? Probably not. It didn't change the actual rates being offered to clients, but the qualifying rate is back up there again by 0.25%. So really long-term, we're looking at a slow, gradual decrease. But it's not a reason for somebody to hold off on making an offer. You probably get asked that a lot in your position. You get asked, should I wait? Should I wait until summer? Because at that point, rates are going to be back down. I'll be able to afford more. Well, if you're looking at that in the summer, you're going to have more competition. So You're going to be making your offer against more people's. It's not to your benefit to hold off and wait. By waiting and not getting into the market, you're missing out on that equity that you could be earning in the property.
Oh, I love this. She is so correct about that. So yes, the longer you delay getting into the market, the less equity you basically are going to end up with at the end of the day. So people that have held off buying, we've seen such crazy increase in value since 2022, 23, now we're in 24. We're seeing the values just increase exponentially. So that home that was 300,000 is much over 300,000 now. So by waiting for rates to do what they're going to do, you're actually losing. You're losing equity because that's a bigger factor right now than a few percentage points on your mortgage. And interest rates, you have to look at them over a very long term, and they fluctuate all the time. But the market and what values are doing are constantly increasing. So you could wait yourself right out of the market at this point.
Absolutely. And I've seen a lot of clients do that. I've had clients that have been pre-approved for a year or two. When I started the process, we had their interest rates in at 3 and 4%. Now that we're up in that 5 to 6 percentage point range, it's decreased their affordability. They can't afford the same home that they could have had they bought a year ago. Not only that, your down payment requirement is going to increase as well. So if that home you were looking at for $300,000 is now priced at $350,000, instead of needing only 5% of $300,000, needing your $15,000 down, you're going to require $17,500. Have you saved that extra money? It's really not to your benefit to wait. So now part 2 of your question, Joel, you mentioned fixed and variable rates. And a lot of first-time home buyers and a lot of people just in general don't have a good understanding of what a fixed interest rate is versus what a variable interest rate is. So your fixed interest rate is going to provide you with a very stable, steady, and consistent payment. You can lock in for a term of as short as 1 year up to 10 years. Most people look at a 5-year fixed rate when they're looking at getting into the market. It's probably the most beneficial for a first-time home buyer. It allows the market to perform as expected. It gives you a set chunk of time where maybe your income has increased over that period of time, but it allows you to get used to making those payments. What happens is at the end of the 5 years, you're up for renewal and you can lock into a new fixed rate. Your payments and the interest charged remain the same for that entire term. I have a lot of people looking right now at 3-year fixed rates because even though they're slightly higher than your 5-year fixed rate right now, it allows you to get in and renew at an earlier date. So if you can renew in 3 years' time when interest rates should be settled back down, you're going to save yourself some of the interest on the back end. So I'm seeing that a lot with fixed rates. On the contrary, variable rates, they're not steady. They fluctuate and they move with prime. As I just mentioned, prime is increased from 2.45 to 7.2%. It's a huge increase. So your variable lending rate is tied to prime. As prime increases, your variable lending rate is going to increase as well. So oftentimes I'll get asked, should I consider a variable rate mortgage or should I look at a fixed rate? They're both great options and it depends on your specific situation. If you have the ability to withhold or withstand a change in payments, if you've got a little bit of fallback saved, you're not going to be as impacted if the prime lending rate goes up and if your variable lending rate goes up and your payment changes. If you're more at a fixed budget, if you're buying your first home and it was a stretch to get into it at that price point, you may find that that variable rate is going to make you uncomfortable. You're going to be worried about whether or not you're making progress and you're paying down and amortizing your mortgage over the appropriate period of time. And in that case, a variable rate really isn't going to be something you want to consider. You're going to want to stick with the fixed rate that is steady, consistent, and set for that period of time.
There you have it. You need to speak with a professional in the mortgage industry to know which product suits you best.
Absolutely.
And I agree with you. It's about getting into the industry and buying and investing when you can afford it.
Absolutely.
Because we can't control what interest rates are going to do.
Yep.
But we can control what is happening now, the decisions you make now, and it's always better to invest sooner rather than later.
Absolutely.